But here's the problem with gold. Let's say I had a bar handy. Now, if I was Kyle Bass, right, everybody knows Kyle, he would literally reach under his desk and he would pull out, he keeps a 26 kilogram Australian gold coin in a safe under his desk. If I had that and I wanted to break it in half and send you half, I'm not strong enough to break it. It's not very divisible. Even if I could break it, I couldn't stuff it in the computer and send it to you. So it's not very functional. Whereas Bitcoin, it has the same scarcity as gold, meaning the amount of new Bitcoin each year that's created is roughly equal to the amount that's lost or stolen, same with gold. So the scarcity is the same, and that's why scarce assets retain their value, but the divisibility and the portability are better. So I think for the next 5,000 years, Bitcoin becomes. So that's a super, super, super long answer to why do I care about digital assets? Why am I a late in life venture capital? I said, my chapter 1, I work for not-for-profits. Then my chapter 2, I built a nice little asset management business. And then for the last 5 years, my chapter 3 is I have been a venture capitalist investing in the digital asset ecosystem. And then chapter 4, I'll teach.
Wait a minute, everyone. Welcome to Bitcoinzilla, your platform for daily cryptocurrency analysis and news. Our mission is to keep it simple. Bitcoinzilla offers engaging information that is easy to understand. Our analysts keep their eyes on the latest news to provide valuable insights via email. Don't miss out on this opportunity. Join our community of 10,000 subscribers and experience the new edge with Bitcoinzilla. Subscribe now. In today's video, Mark Yusko shares his view on Bitcoin's next bull run, and he thinks now is the best opportunity to buy more Bitcoin before the big adoption comes from large companies and countries. So without wasting any time, let's dive into the video.
And one of my hashtags over the past 7-8 years has been get off zero. Okay. Now, what does that mean? It means that zero allocation to Bitcoin and digital assets is the wrong number. And I've been saying for a while that, look, when I started down this path in 2013, 14, I didn't really understand it. True story. I got introduced to Bitcoin the same month as the Winklevoss twins. And if you read the book, Bitcoin Billionaires, which is a great book, Ben Mezrich is a brilliant writer. It's an easy read. You could read it over the weekend. So good. Such a great story. But they're multi-billionaires and I'm not. Why? Well, they got it. They were younger. They didn't have a business that they were tethered to. When I got introduced to it by this good friend of mine, I got the idea, but then when I started doing work and I started writing about it to my clients were like, no, you're an idiot. Go back and do your job. We'll fire you if you talk about magic internet money. And the price went from $500 to $186. This was from March of 2014 to September. I'm like, they were right. 8 weeks later, it was $1,000. I'm like, no, there's something here. What is it? Why does it keep being so resilient? It would go down, it would come back up, and then it would go down. And every time it was making higher highs and higher lows, and the value of the network was growing. So I started diving deeper into this idea of network effects. And the difference between linear and exponential, the most powerful example I use is if I take 20 linear steps across the office, I get to the other side. If I take 20 exponential steps, I go around the world twice. It's unbelievable, right?
Interesting.
And so exponential growth of networks was the really big thing. And if you think about the 5 biggest, most valuable companies in the world, they're not companies the way we think about companies. They're networks, like Amazon. What does Amazon make? They don't make anything. They connect buyers and sellers. They take 46% take rate, which is a really big deal because it's a very powerful network. And so those networks became super, super valuable, like the Apple network. It's not one phone is not very valuable. Lots of phones together, very valuable.
Former United States President Donald Trump made more than a few memorable quotes as he hosted a gaggle of non-fungible token, NFT, enthusiasts at his Florida home on Wednesday, May 8. Besides vowing to keep crypto entrepreneurs in the U.S., Trump also took partial credit for making NFTs hot again, thanks to his sizable collection. He even dissed a political rival's inspired memecoin, inadvertently causing its price to surge. Several clips of his most memorable lines surfaced on X on May 8. On crypto, I'm good with it. One of the first clips to make the rounds on social media included Trump vowing to provide a better regulatory environment for crypto businesses and entrepreneurs by removing the hostility toward crypto, which he suggests is brought about by the administration of U.S. President Joe Biden and the Securities and Exchange Commission.
A lot of the smartest people in crypto are moving their businesses out of the U.S. because they're scared of the U.S.'s regulations.
Because of the hostility.
Correct.
Yeah, crypto is moving out of the U.S. because of hostility toward crypto.
Correct. So what are you going to do to stop it?
Well, we'll stop it because I don't want that. I don't want that. I want that. If we're going to embrace it, we have to let them be here.
To no one's surprise, Trump isn't a fan of the Biden-linked Joe Biden memecoin, which currently boasts a market capitalization of over $260 million. That's a lot of money for a coin. I don't like that investment, he said. Bodian spiked more than 10% shortly after his comments were shared on X. But another memecoin based loosely on Trump, Donald Trump, took the cake, skyrocketing nearly 110% for the same time frame. The multi-billionaire also poked fun at his political rival in a separate comment, mockingly suggesting he has no idea what crypto is. If you're in favor of crypto, you better vote for Trump.
They are against it. The Biden doesn't even know what it is. If you ask Biden, sir, are you for or against crypto? What's that? What the? Get me off the stage. He's saying, get me off the stage. No, he has no idea. But look, Gensler is very much against it. The Democrats are very much against it. And I say this, a lot of people are very much for it, probably a lot of the people in this group. And I'm fine with it. I want to make sure it's good and solid and everything else, but I'm good with it.
So if you had just taken 1% a decade ago, right, and put it into Bitcoin, your portfolio, instead of compounding at 9, would have compounded at 11 with less risk. What if I'd taken 2%? Then you would have compounded at 3% higher. What if I put 5%? You would have compounded at almost 10% higher. Now, this is not promissory. That's not saying this is going to happen in the future. But what it says is that we have this asset. And the reason it's uncorrelated is because stocks, bonds, etc., all rely on the same thing. They rely on interest rates, GDP growth, demographics, inflation. Okay? Bitcoin doesn't rely on any of that. Bitcoin is all about the digital divide. I tell this time, ask anyone over 35, who's your broker? Oh, I don't know, UBS, Merrill Lynch. Why? How much gold do you have? I don't know, 3-4%. How much Bitcoin do you have? Oh my gosh, 0. Are you kidding me? It's a Ponzi scheme. Haven't you heard that Peter Schiff guy? How often do you use DeFi? What the heck is DeFi? What are you talking about? Okay, ask anyone under 35, and DeFi stands for decentralized finance.
Right.
So ask anyone under 35, who's your broker? What's a broker? I mean, I have a Robinhood account. Okay. How much gold do you have? Whoa, are you kidding me? Boomer rocks? 0. Haven't you heard that Peter Schiff guy? How much Bitcoin do you have? I don't want to talk about it. Why not? Because it's like a really big percentage of my net worth. I'm kind of embarrassed. How often do you use DeFi? Every day. So that digital divide is real.
Bitcoin's price drop in recent weeks coincides with a lackluster response to the market debut of spot Bitcoin and Ethereum exchange-traded funds, ETF in Hong Kong, the Federal Reserve's higher for longer interest rate policy, and diminishing flows into spot Bitcoin ETF in the United States. So how low can Bitcoin price go in the ongoing corrective cycle? From a technical standpoint, the ongoing Bitcoin price correction has occurred alongside a decline in the weekly Relative Strength Index, RSI, from its overbought territory. In doing so, the RSI has broken below a multi-month ascending trendline support, akin to the trend that preceded a sharp price correction in 2021. Back then, BTC price fell toward its 50-week EMA, the red wave, raising possibilities of repeating the same scenario in 2024. That brings BTC's downside target to around $46,110 by June, a level aligning with its 0.618 Fibonacci retracement line. A decisive break below the 50-week EMA will risk sending the price toward the 200-week EMA at around $32,410, down about 58% from the current price levels. And do not forget to subscribe to Bitcoin Zella. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.